The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. I am your host, Darrell Martin. If you got any questions, please feel free to give me a call. You can reach me right here, the TFNN number right there. You can see it on Tiger TV, of course. But also, you can go to our website at tfnn.com. And don't forget, you can listen to us online at tfnn.mobi. And the number is 877-927-6648. And that's 877-927-6648. 6648. And right now, checking out the market, looking where everything is at, we have the S&P down just a couple points. We got the Nasdaq basically flat on the day, up a tick right now. We got the Dow down 10 points and the Russell down 5.8. We got gold up basically nearly 18 points on the day at the moment, with copper up 0.059, which is a little over 1.5%. Silver moving huge, up 3% on the day right now. And we also have corn is up right now 8.75. So over 1% move in corn, nearly 2% right now in soybeans, up 28.75. And then let's see here, we also got oil. It is pretty flat on the day despite the oil inventory report. It's up 14 cents right now. And we have natural gas up a mere 0.071, and a mere meaning 2%, the normal volatility of natural gas being 1 to 4%. Then looking over at natural gas or euro dollar, we have that up 74 pips. We got pound dollar up 32. We got Aussie dollar down 48. We have US yen up 35. US Canadian is up 9 pips, and the US franc is down 108 pips right now, with the dollar index being negative across the board at the moment. So, just going over, multiple things with you right there, making sure that you understand just where the market's at. I always like to make sure you stay updated and, to the moment. So right there, we got that one wrapped up. And obviously we had quite a bit of news come out this morning. And so let's go over some of the news. Overnight, we had a couple things, and so we'll start off with that. And first thing to start off with is the Italian 10-year bond auction. Came in at 4.17, actually ticked down from the previous time at 4.48. And the German 30-year bond auction ticked up a little bit, 2.34, actually at 2.45 rate right there. And then, more importantly, more timed, I guess you could say, we had the ADP non-farm employment change came in better than expected. And I expect that they'll revise the number again like they did the last one. The last time they came in and the expectation on the last number was 134,000. They reported 215,000, and then they revised it down to 185. So still better than it was expected, but they did revise it down. The ADP non-farm employment change coming in at 192, quite a bit better than the expectation, but I don't expect it to stay that way. And then we had the advanced GDP come in at a negative 0.1%. And we have not had a negative number since April of 2009. So not showing good news for the market in reality. Right there, the ultimate number is the GDP. And they made sure to have all sorts of disclaimers in there about how the number is definitely going to be revised. It doesn't include any information. They had all these things that they were putting in there. How this is the advanced, it's not the final, and all that stuff. But as if they needed to tell anybody that, but they wanted to make sure that you knew. So they're like, we know this is really bad, but it's not. It probably won't be as bad once we put everything else into it. And so that number came on out. And we also had the Advanced GDP Price Index. That's not as big of an impact. That came in worse than expected as well. Also setting new low since January 2011. But the Advanced GDP quarter-over-quarter number that came out at 8:30 Eastern Time this morning, that was the main one. And so let's go ahead and just take a look at how the markets responded to these reports. And I'll pull up a chart right here for you, and we can check it out. So we got the S&P, and it went a little berserk right there. So right here, 7:15, 8:15 Eastern, right here when the ADP non-farm payrolls come out. I mean, it was good and bad news. The market had mixed results, flew up, flew down. and it started, trickling down, basically saying that they don't think the ADP number was real. That's the bottom line. And then at 7:30, 8:30 Eastern time, the advanced JDP came in negative, had a massive, nice, big move right there on the S&P. And, that was sort of the summary of that. It gained it back, and now everything is just waiting. We're just sitting and waiting to see what's going to happen when the FOMC statement comes out at 2:15. So everybody knows the rate is going to stay at 0.25, but what they don't, or, expects, obviously, but what they don't know is what's going to be in that statement. Why are they leaving it? What are they doing? Everything that goes into that. Some pretty cool trades out there. Gold gave you some awesome opportunities to go in and do strangles. You could have done the same thing on the indexes, but gold definitely took off for you. And if you would have went just a deviation out on both sides, very, very easy gold trade. Love trading gold on U.S. announcements, especially on FOMC day. So any of the U.S. announcements, made U.S. dollar government announcements, just very, very fun to trade gold on that during that time. And it didn't have a real big impact right there on the 7:15, but just a little bit later, it took off. And looking on over at oil, so we had the crude oil inventories report come in. Oil's just been chopping up and down 30, 40 cents over and over and over again most of the day. And if we pull it up and check out what time that report came in, it was released at 10:30, so 9:30 right there. And the number came in at 5.9 million barrels, okay? So again, 5.9 million barrels, which was 3 million more than expected. And meaning inventories did rise, crude oil should fall. And but you got a little bit of market manipulation going on there, so not a whole lot. Really just nothing happening, just up and down, up and down. We should have saw oil drop quite a bit, but really the market's just waiting to see at this point. After the GDP announcement came out this morning, they're waiting to see what's in that FOMC statement, and then we'll see everything move. But that just a very helpful thing to go across and look at everything on here and make sure you understand that, hey, 2:15 is the time. That you do want to be, tightening stops if you're profitable, possibly getting out of positions if you need to, and or limiting your risk with options, or hopping in and checking out the binaries or spreads over at Nadex. And speaking of Nadex, if you don't have an account yet, hop on over to tfnn.com, and you can actually be set up and you could trade this FOMC. And I'll show you a couple different ways to do that. Click on Nadex, click on our products demo account. This takes 15 seconds. So before our next commercial, or before our commercial break, you could have this set up. You just put in your username, first name, last name, phone number, and email address, and apply for demo. They'll send you a password, and then you can log right into the account, and you can check it out. And then also, you can go in and click on Create Account, and you can go from live to funded in literally 5 minutes. Okay, so click on Create Account right there, click Start, and there's only $100 required to fund an account. So it's not like you have to go in and put a whole lot of money in there. Obviously, if you're actually going to seriously trade it, you're going to want more than $100. But if you want to go in and just test it out and have a little bit of, very small opening balance while you're trying it, then they do allow you to open an account with as little as $100 in the account. And there's no platform fees, no data fees, no chart fees, no commissions. They do have exchange fees because they're an exchange, just like the CFTC, regulated the same way, same classification code. They're in Chicago. So they have exchange fees. They're 90 cents a contract. They cap at $9 though. So if you do one contract, it's 90 cents. If you do 100 contracts, it's $9. If you do 10 contracts, it's $9. If you do 5 contracts, it's 90 cents times 5, $4.50. And another thing is, if the trade actually ends up being a losing trade at expiration, where it has a maximum loss on it, then what they'll do is there's no exchange fee on the exit, which is hey, it's sort of nice. At least you're not getting charged on both directions. So they actually make more money when you win and close that trade out before expiration than they do when you lose, and it settles out at maximum loss. And just one more benefit of trading on an exchange when you're trading binaries and or spreads. So definitely make sure to check that out. Now, if you want to get to know about Nadex, a couple things you can do. One is we do have a conference coming up this weekend, and this Saturday, and February 2nd right here. It's going to be in Denver. It's live, and it's free. You do have to register, and it is in person only. So you have to register to attend, and we'll save a seat for you. And we'll be going in and going over dynamic trading strategies. I'll be talking about diagnostic deviations, how I use them on futures and forex, how I use them on binaries and spreads. We're going to be talking about risk and money management. It's a little bit of psychology of trading. And Dan Cook from Nadex is going to be doing basically an introduction to Nadex. He's going to be there to answer questions. I'll be there to answer questions. Tommy O'Brien's going to be there to answer questions. He's going to go to identifying the trade. I'm going to go over the binaries, the spreads, the deviation levels. Then we're going to go into setting up trades. And then we're going to talk about risk and money management, putting all of it together. So, just a great time. We had a great conference out in Florida a little while ago. And so we're looking forward to this conference. We had a lot of great feedback and looking forward to doing another one. So I hope to see you there. And the other thing you can do to sort of get ahead before you come out and is hop on and, you got that 2-week demo right there. So go ahead and check out our 2-week demo as well for the Diagnostic Box Spread Analyzer. You get access to tutorials on binaries on Nadex, tutorials on spreads on Nadex. You get my live deviation levels update every evening. And you also get access to ask me as many questions as you want. There's an Ask Darrell help desk section. And the biggest thing, of course, you also get access to the Diagnostic Box Spread Analyzer. So if you want to trade forex and futures, but not worried about getting stopped out of a trade, not worried about a market moving past your stop, it gaps, it moves, whatever, it flies fast, like on big announcements like this morning on GDP or on the FOMC, then this is the way to do it. So you can go over here, and this actually feeds in live data from the Nadex exchange and does all the hard part for you, all the math for you. So that way, if you're like, hey, I want to buy, or I want to sell gold, or I want to straddle gold, then this right here is going to help you figure that out in a matter of seconds versus spending an easy, once you got it down, 20 or 30 minutes going through, say, 26 spreads going both directions, 13 spreads in one direction, and narrows it way down for you. It makes it super simple. So that way you find the best spread in seconds after you've picked your direction. But definitely, available to answer all the questions you have, and so you can hop in there and take advantage of it. Again, 2-week trial, great thing to sign up for before you show up to the Denver conference. So that way you can be a little bit ahead and have some basics of the binaries and the spreads down before you get there. And we'll be going over the basics. We'll be answering those. But if you're ahead, then that means you can ask, basically the next level questions. So you'll learn more. You'll be able to take more advantage of it. And one thing to remind you of, we do have the great Panther Silver giveaway. And you can see that right there on tfnn.com. And so we are giving away silver consistently right there. So make sure you do go ahead and register and for your chance to win. Been giving away silver every day for the last couple of days here. And so make sure to fill that in right away so that way you can get your chance to win. It does end on February 1st. So you do want to sign up right away, and it's free to enter. And like I said, we're calling people up on a consistent basis and handing out some free silver. So 47 pieces total of silver that we're giving away. And it's always fun to, win something. So definitely check it out. All right, so now that we got that out of the way, let's look at, we got the FOMC statement. What are some of the ways that it could be traded? Okay, because that's a couple things you want to be looking at. And then basically one trade setup I want to talk to you about for tomorrow. I'll go into that real quick, and then we'll spend some time on the FOMC. We'll go into the deviations. For tomorrow, U.S. Canadian. You got 1, 2, 3, 4, 5, 6, 7, 8 trades happening at 8:30 a.m. Eastern Time. U.S. Canadian is going to move. All right, take advantage of it. That's a good time to check out a potential strangle, demo trade it, whatever. But definitely check out doing a strangle, and we'll talk about those when we come right back from this break. Stay right there.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th, and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week, with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com, or check them out on the NYSE Amex symbol GPL, or on the Toronto Stock Exchange symbol GPR.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, welcome on back here to the Diagnostic Trading Hour. And we have dipped into the hat and drawn another winner on the Great Panther Silver giveaway. So we'll go ahead and make that announcement. Cassie of Redondo Beach, Florida. Go ahead and give us a call. You have won a half-ounce of silver. Got a half-ounce silver bar from the Great Panther Silver and TFNN giveaway. So make sure to give us a call right here at 877-927-6648. If you can, give us a call by 6 o'clock. Again, that's 877-927-6648. Again, congratulations, Cassie, for winning a half-ounce of silver. So get that half-ounce silver bar. All right, so let's look at a few different things that we could do. We got some stuff coming up. We had a big move on gold this morning, and so I'm going to talk to you about a couple different plays. Now, one of the things that's really important to understand is that if you're looking at gold, okay, you need to understand that and this is sort of a tricky thing that some people don't get, and so that's why I want to make sure that you do get it. Otherwise, you're going to place the wrong trade, and you're not going to be happy, okay, even in your demo account, right? So, gold expires, okay? So I'll show you this right here. Gold is going to actually close when the pit closes at 130. So you can't use the spreads if you want to go in and do, like, say, a straddle on gold whenever the FOMC comes out. The dailies, binaries, also close at 130, okay? But The weekly binaries are ones that you could check out as a potential trading opportunity, and they don't close until 1:30 on Friday. But today they'll actually close at 5 o'clock. So you could still trade gold on Nadex past the 1:30 pit close by taking advantage of the weekly binaries. And one of the ways you can find out what the hours are, if you're ever trying to figure that out, you can hop over to nadex.com. You can click on range of markets. You can go to commodities, and then you got metals right there. So click on contract specs. Once you click on contract specs, you can scroll down here and you'll see gold. And this is the binaries right here, gold, and then you go down to weekly. Notice how it says they close at 5 o'clock. So that's how you know. Now, on Friday, they're going to close at 1:30. All right? But Monday through Thursday, they're going to close at 5 o'clock. So you can actually take advantage of that. And that's just it's pretty cool. It's something you can take, advantage of while you're trying to trade it. And when you're trading it, you're going to want to be looking at a gold chart. And obviously, so let's just say we're looking over here at gold. And I'll pull up the chart right there over on, got a couple different platforms that I use. I guess I'll pull it up over on Thinkorswim right now. And so let's pull that one. And so we're looking at this right here, trying to figure out what we want to do. And what we can see is here that gold is currently trading at 1681. Now what we can also see is that our deviation levels, okay, right here on gold, if we go up to 1681, that's going to put us, basically a one deviation move is about 12 points. Okay, so let's say it's still at 1681 here in the next 30 minutes. Or you could even, put it on now. We'll look at it to see, is there a good risk-reward opportunity? Sometimes there is, sometimes there isn't. So, pulling that up over here, 1681, we got 1681.5. Okay, that works. So that's a potential, that's where the market's at. So we got to add 12 points to that, so that'd be 1693. So we got a 1691.5, we have a 1701. So to do a strangle on this is probably going to be a little bit counterproductive unless you plan on holding it until 5 o'clock. Because you can also go down here and 12 points below it, so you're looking at, right there. Really, your risk reward is not going to add up. So on the trade right now, there's a lot of implied volatility built in, obviously, just based on what's happened already this morning. And so you're going to have a risk of about $30-something on both sides. You're looking at a risk of about $65 on the trade to make about $65. So, I mean, it'd be about a 1-to-1 risk-reward ratio if you were going to hold it till 5 o'clock. And it still wouldn't expire at 5. That's the big thing. It actually expires at 5 on Friday. So you actually have to hold it to Friday to get that maximum profit potential. So I like to get out on the news trades when it hits the strike that I'm buying or selling. So in this instance, gold really just may not be the best choice for the trade. And so that's one thing that definitely consider and look at whenever you're trying to decide what you want to do. Is right here the risk reward is not there. And one of the things I spent some time talking to a couple traders yesterday is risk is everything. Okay, psychology of risk is huge. And Nadex, one of the cool things about it is it limits your risk. You can only lose $20 or $10 or $30 per contract. Whatever it is that you put on. But there's a flaw that a lot of traders make with that risk. And so what we're going to do is we're going to talk about that when we come back and see if we can find a different potential setup for what is coming up here in the next 45 minutes. So stay right there right after. I'll be right back right after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go along the QQQ, the Nasdaq 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, checking out some things here. We got some announcements coming up. One of the things we left off on is we were talking about how to trade the FOMC announcement. And we were also talking about some of the biggest mistakes traders make with risk. And so let's go ahead and let me pull this up right here. And talk about, with risk, people go in and they trade Nadex. They also get limited risk, which is such a great benefit. But sometimes they overdo it. So your risk is limited, but you still have the ability to put on as many contracts as you want. And so if you're going in and putting on 100 contracts or 200 contracts or 50 contracts, you need to be looking at, people go, how many contracts should I trade? Well, your contract size, your position size, really in any market that you're trading, comes down to your risk. So you need to figure out what is an acceptable amount of risk. And, that's going to be different for every trader because it's not just how much money you have in your account. Okay, it's also how easy can you recover that money if you lost it. It's how much other money do you have. I mean, maybe you have, $1,000 in the account, but you have $100,000 in a savings account. That is for risk, investments, whatever. It's just sitting there on the sidelines. It's not your savings money. It's literally just, it's additional expendable risk management capital. That person has a hugely different answer than the person that has $1,000 in their account and that's their savings for the last 6 months. So, that's always a difficult question. People ask me that all the time. What's a good risk management? And so there are a few things that I do, give out just, and these are not guidelines, they're not advice, but they're, just things that I've found have worked well for me and some other traders found work well for them. Is your ultimate goal is to be risking no more than 1% of your risk capital, okay, whenever you're trading. The reality is that is not feasible for most traders, okay? So, and the reason is because your account gets larger and larger, it's harder and harder to recover that money, and so you need to lower that percentage. So, before 1%, then you got 2%, okay? That's your next goal. So, 1% is the ultimate goal. So that's sort of like your final milestone that you're going for. The milestone before that, okay, would be, say 2%, okay? And that's a pretty standard rule in trading and risking no more than 2% of your capital. Now going before that, so what's the milestone before that? Because maybe you're not in that 2% category yet. You have $500, 2% of your capital. That's going to be pretty tough to do, a lot of trades that you'd want to do. So before that, you got basically 5%. And when I say risk, by the way, I mean risk per day, okay? I don't mean risk per trade. So, and this is if you're, you're day trading, but no more than, 1% or 2% or 5% in a given day. So if you're going to do more than one trade, then you need to consider the fact that, hey, I need to divide this up equally and not risk more than that amount per day, okay? Of course, obviously, how often you're profitable and how, much you make when you are profitable versus how much you lose when you lose, all that factors in. But if you risk, say, 5% a day, you basically have to have 20 days in a row. You actually have more than 20 days because 5% should go down as the account value goes down. 5% goes up when the account value goes up, okay? So in other words, if you have $1,000 and it's 5%, that's one number. But if let's say you lost 5%, okay, the next day, then it's going to be 5% of, what is that, $950 or whatever. So, and so let's see here. I'll just show you the example here. So if you lost $50, that'd be $950. So now you got $950 times 0.05. So now you can only risk 47.5. Okay. So so it keeps getting smaller and smaller as your account gets smaller. Your risk gets smaller because you're using a percentage and not simply a dollar amount. So that's the nice thing about, say, a 5% rule or 2% or 1% rule. As your account gets larger, you're able to actually do larger position sizes. So let your account risk grow as your account's growing, but it also reins in at your risk as your account's shrinking. And if you go through and chart it out, it's quite a few days. You'd have to go a lot of days before you actually hit out and capped out, like lost your entire account if you were capping at, say, 5% a day. It wouldn't be 20 days. It'd be like 30, 40 days because it keeps getting smaller and smaller and smaller. So it lets you survive longer because the number one rule in trading is survival. Most people don't survive long enough to keep trading. Okay, they either give up, they quit, they lose everything once, they lose everything twice, they give up, and they think it's their system, they think it's their indicator, they think it's whatever. But always, okay, you can attribute it to risk management. And then, can you get better with better systems and understanding chart analysis and using statistics and deviations and seasonal analysis and fundamental analysis? Yes, of course, that's going to improve your trading. But I don't care how good you are at all of it. Okay? I mean, besides, like, you're just always right, which isn't going to happen. Okay? If you don't have good risk management, it doesn't matter. There's an interesting movie. You can get it on Netflix. It's called Floored. And it's a bit crude, so I'll just warn you right now. But it's for traders, so you should expect that. But it's all these for traders who are trying to, like, adapt to the electronic markets. And they go, basically, I mean, they just talk about, they'll say, over and over again, it doesn't matter how much money you make. It doesn't matter how often you're right. It matters, at the end of the day, it's not what you make, it's what you keep. It's not what you make, it's what you lose. That's the end of the day. I mean, they're going through, and I mean, it's just one thing after another. And so it's it's a good reality check movie that you should watch if you're a trader. So, like I said, you can get it for free on Netflix. But like the online webcast or whatever, or on your Xbox or however you access it, Kindles and everything else. But you got to get your risk management under control, and you got to have a plan, and you got to stick to that plan. Because what happens is you get a winning streak going, and then all of a sudden you're like, I'm going to go for 10% or 20%, and you're randomly choosing contract sizes having nothing to do with any kind of risk management. Okay, so again, the title of that movie is Floored, Floored, and there's several good ones out there, but that just sort of lay it out there. And there's another one. I'll see if I can remember the name of it before the show's over. It's one that if you're ever, it it's one of the most painful movies on trading to watch in the world. But not the one I'm talking about. This one's just sort of like, wow, and you see how the the floor and the electronic has changed and everything else. But let's see here. Yeah, there it is. But there's Floored right there. And so you can watch that one, and just basically the personal demons that they struggle with. So, but definitely insight into how it goes, and it's more about floor traders than it is about anything else. And so that's one of the things I just always recommend. Like whenever I'm mentoring somebody or helping somebody learn how to trade, I'm like, you need to watch this. It's a good wake up. There's also The Pit is another good one that you can check out, and there's one or two others. But so that's are really, really, really good ones. And there's a lot of the ones I'm talking about are more like documentaries and like they're true stories. So there's a lot of fun ones. You got Boiler Room, and you got Inside Job. You got, let's see what else you have. Obviously Wall Street, the new Wall Street, which was basically just a documentary on what just happened in 2008. But those two movies right there, but definitely Floored is a good wake up call for you. But you got to get your risk management under control. Okay, if you get that under control, it's amazing how things change in your trading. And I was told, until I get risk under control, I'll never make any money. And that is the truest statement in the world. We have the Super Bowl coming up this weekend. And one of the things I talk about is nobody wins the Super Bowl by trying to win the Super Bowl. I mean, it just doesn't happen. They don't go out there on the first game, on the first kickoff, and they go, okay, how do we win the Super Bowl? Like that is not in their mind. If it is, they are not going to win it. Okay? They win it one play at a time. They win it by getting first downs, by getting touchdowns, by stopping the other team from getting first downs and getting touchdowns. That's how you win. You win one play at a time, one day at a time. You can't revenge trade, trying to make back the money from yesterday. Well, I lost 5% yesterday, so I'm going to risk 10% today so I can make that money back. It doesn't work. And if you trade for any time, you've done it, probably. I don't know too many that haven't. And it may work for you, but then it won't. And that's the real rule. The worst thing that can happen for you is you do break a rule, and then you repeat it, and then it breaks you. So I just can't stress enough. Even when you're trading a limited risk product like Nadex, is manage your own risk. Your risk will not grow, but you can decide if you want to put in all in or half in or 25% in. And if you risk too much, you need to count on the fact that you are going to lose in trading. And ideally, you are going to win in trading, okay? You got to at least win or lose half the time, okay? Just buying every day, if you look at the historical stats. And I've literally pulled them where I bought every day to see what happened. It was like 50.2% of the time, like trades were profitable, okay? But if you go in and just, you got to get that risk management under control. And so, I don't know. I'll get off my soapbox on that one, but I just, I hate to hear the stories, and, I've been through the pain. I'm sure some of you have, and if you want to be successful, you got to survive, and you can't survive without good risk management. All right, so let's check out some potential ways you could play the upcoming FOMC announcement. There'll be a couple ways that I'd probably look at trading it, and one of the things I'll do is I'll go over to, there's a variety of websites, say like Forex Factory, and I'll go over and I'll look at FOMC statement, and then or actually, I'll go to the rate, but the statement is actually, since there's no surprise on that, they have that thing called Seismic Quick Index. That's pretty cool. And you just click on it, and you can open this up, and you can see, like I say, over the last, 5, or 6 releases, what currency pair has been affected the most. So we got, let's see, Euro Dollar, sort of the winner on this one right here. I got Aussie Dollar up there pretty high. We'll go over here. Let's see, Aussie Dollar is the winner right there. Go down here, Aussie Dollar, wow. Definitely the top. You got US Yen also having a decent impact on that one. But Aussie Dollar so far. Go a little bit further. Let's see, Aussie Dollar, not the top one on this one, but still a decent move. And go down a little further. Aussie Dollar, winner again. So that may tell you, what? I want to trade the Aussie Dollar on the FOMC. So that's one way to find a currency pair. Okay? And the next step is you need to know some deviations. So on the Aussie Dollar. So if we pull that up and we look at it, all right, and we go, okay, so Aussie Dollar is at 1.0419. And then let's go down here, let's check out the Aussie Dollar on the deviations. 10.0419. So we're right around here. So now what we need to do is find one above and below that's going to give us a pretty close risk to reward. Let's see where that falls inside the deviation levels. So we go over here, we're going to go to Forex, we're going to go to Aussie dollar, we're going to go to dailies. You could also do, you would not want to do 12 to 2 because the announcement's going to be over. Or actually it doesn't even happen until 2:15, and usually it's late. So you could do 1 to 3, but you may want to do daily. So either one of those, is a viable option. And again, we got the Aussie dollar sitting right now at 1.4120, so right around here. And so you'd either need, so let's go ahead and I'll open up some order tickets here. Okay, so I'm going to tear this ticket off. Ideally looking for about a $10 or so risk. So right around there, that gives us a $12 risk. All right, so if we look at these two, and this is looking at the intradays, okay, then how does that line up with our deviation? So we got 446 and 396. So right here we got 446, so that's 443, so that's right there, 396. That's actually before that deviation. So that gives us, that's basically half a deviation move in either direction off of the announcement. That is not a bad trade at all. Well, I can't say it's not a bad, maybe a bad trade, but it's a decent setup trade with a good risk reward. And so we go in, and let's say you're just doing one contract on the trade, okay? So this would be a possibility. You hop in, you check this out, you hit place order, and place order, okay? Once the order's in, on 1.0446 to buy, and 1.0396 to sell, then you can hop over into your Nadex account, and you can go under working orders over here. So where did I hide it at? And let's see, there it is. Got it hiding down there. Go into, sorry, not working orders, but open positions. And so we go to the Aussie dollar, and we go in, and this is important, okay, if I sold it, I'm going to set it to buy it back at 57, okay? So basically if it gets right to that strike, it'll get me out. So it moves that half deviation. All right, and then if I bought it, I'm going to sell it out at 43. That gives me room for bid-ask spread, and again, if it gets right to or really close to that strike, it'll get me out. So right there, now the order's working for me, FOMC comes out, thing explodes, I'm covered, okay? My profit management's in place, and by the way, if it flies up and flies down, I can make money in both directions, okay? So pretty simple trade right there. And then another possibility, so that's our Forex possibility. You could also go in and check out potentially like one of the indices. So let's say you want to check out we'll just say the S&P 500. And again, we could look at 1 to 3, or you could look at daily. So on this one, they both expire at the same time. That's why it didn't matter. And they're tighter. I like the fact that the intraday strikes are tighter. And if they expire at the same time, because both daily FX expires at 3 and intraday, meaning the ones that go from 1 to 3, expire at 3 p.m. So if I can get tighter strikes, I can usually get better risk-reward scenarios. So I went ahead and grabbed that right there. That's why we did that. So over here, though, the dailies are going to expire at 4:15. So it actually gives me more time to potentially be right on the trade. And so let's see here. So let's check out the markets on a potential US 500 trade. And let's pull up a quote on where the S&P E-minis are currently at. Right now, they're quoting at 1502.25. When we come back, we'll look at a couple strikes on looking at the S&P E-minis. We're doing a strangle on Nadex binaries. And then we may also check out a spread if we have time. Be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And so we're also going to look at a potential S&P 500 trade right here. And we're going in and looking at, right now we got a quote on the S&P at about 1502.25 right now. And so let's go in over here and say, hey, what does that tell us about the S&P? So basically we're right near settlement. And a half deviation is about 6 points. So can we get on a decent trade? Say 6 points away. So the full deviation is 12. So that would be a possibility as well. So 6 points is going to be 2 strikes. Okay. So right there, 23.50, and then we'd have to go a little bit lower down here. And what we'll see is we got right there 1502. So we would put on like 77.50. Not really a great trade. So because the risk on the trade is going to be about $40. Remember, we want to get out for, like about a $20 profit on about a $20 risk. So really, probably not the best trade that we're trying to take advantage of right there. And so I would definitely look at a few different possibilities on what we could do. Let's look at, do we have a good potential possibility for maybe one deviation? So we'll go in and we'll look at one deviation. We'll also check out the chart to see, is that even do we think that's realistic? Or we can go for 0.7. Let's go for 0.7. So 1513, 1496. So if we go over here, we go, okay, so 1514. All right, there we go. That's not bad. And then remember, go up to the end of the day. All right, and then let's see, and then just double check the prices there. $14.96. Let's see here. Ooh, $25 on that one. So they got some implied volatility to the downside happening right now. We are a few points down too. So you'd probably have to stretch it out further if you were going to do this trade, because that's $25 risk. You only have $5 risk on the other side, but they're definitely putting some weight in on the downside right now. $14.90 right there. Where does that put us on the deviations? That does put us below a 1 deviation mark from where we're at. So right now, that's not my favorite trade. So not a bad trade. It may definitely move there, but just a summary on that trade. Now let's go ahead and look at one other possibility, and see if we can do this here in the next couple minutes. We got the US 500, and I want to look at a potential spread. And we're going to look at, say, 415. I'm just going to see if there's one that exists like right before the FOMC. And there's after. Let's see if there's one that's available that's a good risk reward. And not finding one that I just necessarily falling in love with on that. So let's go actually flip it around. Let's see if there's anything that has a shorter term expiration that's at least 3 o'clock. So we're going to need basically at least 20 minutes left till expiration on there. And this gives us a risk of about $50 on each side. We're buying where the market is. If we do move up to either one of those levels right here, then we can see that, let's say if we just moved to $14.98 or $15.11, then we'd be making like about $70 right there. We'd be making over here $14.98.7. From 1502, we'd be making about $50 in either direction. So if we go over and check that out, $50 in either direction, then our risk is going to be about $35 on each side, because we're in the money on both of these because of the different strike prices. So since the strike prices don't line up, it's not there. So we're not going to take the trade. So, anyways, but we'll see how that Aussie dollar one plays out. We did a gold strangle this morning, and that one worked out really well. But I hope you all have a great day, a safe day. I look forward to seeing you tomorrow. Stay tuned. We have another great show coming up for you right after this.